Hi guys, welcome to our YouTube channel. In the previous video, we shared some interesting facts with you about insurance as like what is insurance, some historical background of insurance practice in England and USA. Now, in today's video, I'm going to tell you guys some kinds of insurance. So, here are some kinds of insurance. Number one include property insurance. There are two main type of contracts, home and commercial, have been developed to insure against loss from accidental destruction of property. These contracts or form typically are divided into three or four parts: insuring agreements, identification of covered property, condition and stipulation and exclusion. Home insurance covers individual or non-business property. Introduced in 1958, it gradually replaced the older method of insuring individual property under the standard fire policy. Per insured. In home owners policies, of which there are several type, coverage can be all risk or named peril. All risk policy offer insurance on any peril except those later excluded in the policy. The advantage of this contract is that if property is destroyed by a peril not specifically exclude, the insurance is good. In named peril policies, no coverage is provided unless the property is damaged by peril specifically listed in the contract. In addition to protection against the loss from the destruction of the owner's properties by perils such as fire, lightning, theft, explosion, and windstorm, homeowner policies typically insure against other types of risk faced by the homeowner, such as legal liability to other for injuries, medical payments to other, and additional expenses incurred when the insured owner is required to vacate the premises after an insured peril occurs. Thus, the homeowner policy is multiple in nature, covering a wide variety of risks formerly written under separate contract. Now, the number fourth is property covered. Homeowner from air return forms are written to cover damage to or loss of not only an owner dwelling but also structures such as garages and fences, trees and sheds, personal properties, excluding certain listed item properties away from the premises such as board, money and securities, subject to dollar limits and loss due to forgery. They also cover removal of debris following a loss expenditure to protect property from further loss and loss of property removed from the premises for structure safety once an insured peril has occurred. Limitation on amount recoverable. There are some following limitations in an amount which is recoverable. Recovery under homeowner forms is limited to loss due directly to the occurrence of the insured peril. Loss caused by some intervening sources not insured by the policy are not covered. For example, if a flood or a landslide, which usually are excluded peril. Severely damages are housed that subsequently in destroying by fire. The homeowner recovery from the fire is limited to the value of the house already damaged by the flood or landslide. Recovery under Home homeowners forms may be on the basis of either full replacement cost or actual cash value ACV. Under the former, the owner suffers no reduction in loss recovery due to description depreciation of the property from its original value. This basics applies if the owner took out coverage that it's at least equal to the named percentage, for example 80% of the replacement value of the property. If the insurance amount is less than 80%, a co-insurance clause is triggered, the operation of which reduce the recovery amount to the value of the lost time. The ratio of the amount of the insurance actually carried to the amount equal to 80% of the value of the property. However, the reduced recovery will not be less than the actual cash value of the property, defined as the full replacement cost minus and allows for depreciation up to the amount of the policy. For example, assume that a property is valued for 1 lakh $1 lakh new, has depreciated 20% in value. Insurance of $60,000 is taken and $10,000 loss occur, the actual cash value of the loss is $8,000. 10,000 minus 20% deprivation. The operation of the co-insurance cause would limit recovery to 6 by 8 of the loss, or $7,500. However, since the actual cash value of the loss is $8,000, this is the amount of recovery. Recovery under homeowner forms is also limited if more than one policy applies to the loss. For example, if two policies with equal limits are taken out, each contribute one half of any insured loss. Loss payment also are limited to the amount of insured person insurable interest. Thus, if a homeowner has only one half interest in the building, the recovery is limited to one half of the insured loss. The co-owner would need to have arranged insurance for their own interest. That's it for today's video, and in the next video I hope we will discuss some types of health insurance.